Hello and welcome back to Bunnex Investment Group, your number one source on trading strategies as well as advice. If you're new here, consider subscribing and check the notification bell icon so that you'll be notified each and every time we upload a new video. So in this video, we are going to be talking about a strategy that can be applied on US oil. In short, a US oil strategy. Yes, you may as well apply it to other high volatile commodities like wheat, gold, as well as other futures. So in this strategy, we'll be locating peaks, and it's unfortunate that we are not going to delve much into how to locate peaks. So basically, peaks are points of reversal like this one. This is a point of reversal. Therefore, we may term this a peak because from this point, the market actually reversed, and from this point, the market also reversed. Therefore, this is a peak as well as this one. But before we jump into the war video, make sure you check out our free Telegram channel. The link is right in the description box below. So if we are to look at this chart like how it is right now, it's a bit difficult to find entry points and exits with consistency and in an orderly manner. We all know that trading is something that requires order. The way you lose, the way you win must be in a systematic approach. And of course, as a disclaimer, this strategy is not 100%. So in this case, we are going to apply indicators to simplify how we view this market. So after applying indicators, the market will actually start to look like this. So in our case, as I have mentioned earlier, we will be locating peaks. After peak location, we will now need to find setups away from that peak. So basically, the setups that we'll be looking are M's and W after a peak has been located. It's unfortunate that we won't be dwelling much on location of peaks, but as I've said, peaks are actually turning points that are available to us on the charts. After that, we'll actually start to look for the M's and W's depending on the context of the peak. So we have several methods of determining peaks, and we cover that in our advanced course. You may check out and sign up for our advanced course using the link in the description box below. So in this case, we can see that I've already marked the peaks. In this case, we had this as our peak. From that peak, we can see, or we actually started to look for patterns. This is an upward peak. Therefore, we were starting to look for W's in this case. So basically, a W was issued, and after a W was issued, wait for candlestick closure above the 13 EMA, and in this case my 13 EMA is in red. Then the one in blue is 50, the one in white is 200, and the one in dark blue is 800. If you have been following this channel for quite a long time, you'd know that I always apply these EMAs. So in this case, we had a beautiful pattern and the market went straight up. Therefore, it was a winning trade. So after that, we started to look again for a peak. A peak is determined by several methods. Some others includes counting of levels. You need to count levels to see where you are in the cycle and basically attain a peak. So in this case, we had this type of peak, which is particularly known as the inverted head and shoulder pattern. It was this being the shoulder, head, and then another shoulder. After that, we started to look for our M's and W's. In this particular context, it's also a W since this was an upward pattern. So after that, we can see we had a beautiful W that was issued. We had first leg and second leg, and candle closure above the 13 could give us an entry point, and it moved in our direction. So we wouldn't like to actually go overnight with this type of trades, but to take our profits after we attain probably a 1.5R to 2R, right? And then we had another peak here, which was also a head and shoulder after, basically it was after 3 levels of rise from the previous peak. So after having this peak, the next thing was now to look for a pattern away from that particular peak. We can see that it went up and we were looking for a proper pattern. In this case, this pattern was a bit ugly, but it was the kind of patterns that we'll be looking at, which is a W. First leg was issued and then the second leg was also issued. Candlestick closure above the 13 was actually given, and our entry was a win as well. And we keep on looking for peaks. After 3 levels of rise, 3 levels of drop, we get a peak reset, and probably some of those peaks that we are getting are those ones that we call peak resets. So this was a peak reset. It's unfortunate I'm not counting levels, but just showing you a very easy way of trading US oil. In this case, we had this peak. After that peak, a W was issued at this point, and in this case, candlestick closure above the 13 EMA, and the market went our way. That was a W away from this particular peak. So if you are in this turmoil, you will definitely be losing, because you'll be trying to catch which proper direction is the market going. Is it going up or is it going downwards? Because as you can see, it was a consolidation. So it would be better to avoid trading directly on the peak and rather wait for patterns away from the peak. In this case, we actually obtained this particular pattern and it played out very well, right? So going forth again, looking for peaks, this was also a peak reset that was in line with what we were looking for. After that peak reset, we can see that the market went up. It actually gapped, but after gapping, we got a proper entry. In this case, this was a day. In this particular day, we had first leg and second leg, and candlestick closure above 13 EMA gave us our entry point, but unfortunately the market went up and then retested. This type of pattern is called, it's actually a special pattern, special type of a W, a 3-pin to the bottom, which actually was issued 1, 2 and 3, and then the market went up. Of course, here and there we find something like this. It's meant to actually scare traders in the rightful market context and then probably close their positions prematurely. But if you know, you may actually stick with your trade until it plays out like that. Then after that, we also we are now at this point. So this point is actually promising to be a peak, but it all depends on what will happen next. The thing that we are now waiting is, are we still in an upward direction or upward market context? But due to the geopolitical tensions between Ukraine and Russia, we are likely to see oil rising again, and from that this will become a peak reset to start again the cycle going up. So if we have something like that, usually we'll have the market go up and then we'll react only after seeing a pattern in our direction or in our market context like that. So we'll only enter after this occurs, right? So I have skipped a lot of stuff in this particular video. Of course, if I were to explain everything, this was not going to be a very short video like this. It was going to last for a long time. So we have an advanced course that covers the institutional market maker method, which will explain how to attain these peaks as well as how to attain these patterns properly. So this course will actually start from the beginner level up to the advanced level, explaining all the stuff that you need to know in order to trade this properly. So you may consider having it if you would like to apply it or to add to your knowledge in your trading. On that note, we come to the end of this video. Thank you for watching and have a blessed day.